Okay, to help us focus on some fundamentals behind the technicals, take a deeper dive into and add on to a conversation we had about a week ago regarding futures and some of the myths associated with it. Let's bring in Alan Nuckman, Chief Market Strategist at BullseyeOption.com. Alan, first and foremost, a quick thought on Powell yesterday and the appeasing CPI data that sent stocks to these new all-time highs.
Nothing new here. Nothing new here. He's played it perfectly, and I'm a results guy, and you just showed the result. The result has been an absolute stair-step higher in stocks. So he's got the results he wanted. He's played this perfectly. For all the doubters and the non-believers, hey, guess what? The market's making new all-time highs, and I think we've got 32 all-time highs in the S&P this year alone. So, you can't fight the power. Yeah. That's what it is.
Can't fight the power, can't fight the Powell either, I guess one could argue. He has played this perfectly in many ways. And just real quick, I'm kind of reminded, we touched on it. Last time we saw PPI came in a little hotter than expected. That raised some concerns. Powell kind of eased those. And we've talked also on the show quite a bit about themes, characteristics associated with this trend. And one of those has been, tech strength, right, amidst some of the concerns associated with rate cuts when they'd come or if they'd come, but also Powell reassuring investors and traders that the Fed's in control here, right? They're be patient. Things are going to come around.
He says what he needs to say. It's a lot different than when we were kids, Ben, and they came up with this.
It was a little more abrupt.
He's been coddling investors.
Yeah, he finesses
he tells them almost everything they need to know. Yeah. If you can't figure it out, it's not about identifying when or the rate cuts are going to come. It's about identifying how the markets are going to move. Yeah. There's no prize for picking when this rate cut comes. It's how is the stock market going to react in the meantime, and then after that cut policy starts.
We have argued for a little bit now that this market's pretty content with not really even focused so much on when or if these rate cuts going to come, just that we've seen peak, right? And that's what I feel like has really added to this lift off.
We're here for longer. We're not moving higher. We're here for longer. Okay. We've seen the dollar index stay, and the fact that the dollar's not, going higher has been a positive, not only for stocks, but obviously for commodities. Now, the dollar's firmed a bit, and we've seen a little reset in some of these commodities, but a lot of this is another opportunity, is the way we look at it as traders.
All right. Speaking of opportunity here, and I'd argue again that the dollar's been supportive as well. Range bound, also yields. Stubbornly elevated levels around 4.5 for the 10-year, but contained, right? Holding below 5, those highs we saw last fall. Let's get back to some of those futures myths we were debunking about a week ago, I think it was, and the conversation that we had. We touched on a couple key points. I want to get into one of them right away because I think it ties into this discussion. We talked about how commodities are not only for short-term price moves, right? Not only for taking advantage of intraday, high-frequency type 1-minute rapid-fire in and out type trading. I mean, pull up this chart here if we could real quick. I mean, this really speaks to that longer term trend I just mentioned and how the bulls have been in charge since October here, Alan.
Yeah, that's exactly right. We've had one day in the last 3 months that the S&P's closed below 5,000. One day since the end of February.
Insane.
That's a pretty strong trend. But what the point is that things have changed. I don't dabble anymore in the daily stuff. My lifestyle has changed, and I want to make the markets work for me. So I use options, and I position for the longer term, the larger moves, and let the markets do their ups and downs. I have limited risk, and I can participate in the direction.
The point being here, a younger man's game, maybe, right? If you're trying to high frequency trade these markets,
I'm done with that.
If you're going off the 5-minute candle chart, I'm done too. Don't get me wrong. I've learned my lesson trying to do that. But if you're looking at those longer term charts, again, don't rule out futures, right? Because there is opportunity in terms of taking advantage of these trends.
And number one is with the futures, the payoff is much greater. You could trade gold futures or you could trade gold GLD.
Well, that gets me to the next question I had for you, Alan. And I'm sorry to interrupt you, but I don't want you to get too far ahead of us here because we talked about that and you scratched the surface on something which I think is key. Leverage, right? So we
in a positive way. Let's talk about leverage in a positive way.
That's right. It can be a bad thing too. Don't forget. I think that's important. A good reminder. But we used to talk about it along these lines, right? If you buy one share of CL, Colgate, right, and it goes $10, down $1, you're down $1, right?
Right.
But if you buy a share of /CL, one contract of crude oil, and it goes down $1, you're down $1,000, right? A little bit of a different in terms of notional value, in terms of what you control by buying a certain product, a contract of crude, for example, versus one contract of Colgate.
Right, exactly. So what is the cash value of a crude contract? So that's what you have to look at in comparison. So you're controlling a large, for about 10%, or let's 5 to 10%, is what it requires to control that whole contract of crude. But there are crude options. And again, I'm a big limited risk guy. I like to sleep well at night. And I call them lose no sleep lifestyle options. And I position 3 to 6 months out. So like you said, the short-term game is over for us. We've done that. It's not as much fun as we thought it was.
Yeah.
I don't need that in my life anymore, but I want to take advantage of what the markets offer. And I thought crude yesterday had a nice price action. Kevin did point out that the close was somewhat disappointing, but I don't think it's over, this big bounce. And so let's see what the next move is. If we can get a push above 80, we could get some sentiment shift. And like he stated, there's a lot of negative sentiment on crude right now, but those minds can change by price. Price does that trick for us.
Alan, lastly, price above 80, does that start to weigh on sentiment in terms of stocks, the bulls?
No.
Oh, interesting. You think it's a reflection of a strong economy and we can stomach higher levels?
I've always said that high crude prices, and I've been proven by history that high crude prices are a positive. They're a sign of strength. And if you go back to 2011, 2014, we hovered at the $100 level that whole time, and the stock market rallied 33%. So let's remember, crude oil right now is half of what it was at its high. So there's still some upside potential, and that's been the one sector that has not rallied yet. I want to point out quickly before we finish here that gold, silver, and copper have all come back to their breakout points, and we'll see how we can hold these important levels and test and reject. But if they do bounce back, there's a lot of upside here. A full V recovery in gold targets, $150 move up to 2,600. And silver back up to 36, which is 20% higher than we are here. So if we get some dollar down, we get some metals to break out again. There's some potential there.
Okay, gold and copper back to those prior areas of resistance right now, possibly finding some support at that point. Alan, appreciate you joining us. We're going to further this discussion at another time. Alan Nuckman, Chief Market Strategist at BullseyeOption.com. Coming up, a quick break, but some data after that. PPI jobless claims, a look at a few markets that are trending. Got Jerry Parker, CEO of Chess.